Okay, we have what looks to be the start of a sell-off. The Dow was down 171.5 points, down 0.37%. The NASDAQ, or I'm sorry, the S&P was down 0.28%, down almost 19 points. Down lower at the session, but didn't close there, but still down. The NASDAQ down 0.34%. The Russell down almost 1%. The VIX was down 0.276%. And again, the VIX has given a major reversal signal for the market. We had the big rally back up on NVIDIA, back up to test resistance, and it's reversing off of that level. Yet again, there's major resistance there in the weekly time frame and our upper boundary, the broadening formation. Stocks goes lower for the second day as investors continue selling AI plays, NVIDIA and Oracle. Had those big rallies on both of those stocks, and now we're seeing distribution. Quickly want to say this. We have had the seasonality not be correct. Sometimes it's right, oftentimes it is, but it's not been correct. But could we be getting back on track now with a September rally into mid-September here, towards late September, latter half of September, and could we be getting back on track into a sell-off into October over the next few weeks? And then the fourth quarter, the seasonality, would suggest a spectacular fourth quarter, which I think is going to be the case for both Bitcoin and for the stock market. To do what we did back in 2024, in July of 2024, and see, NASDAQ dropped nearly 16% in about 2.5 or 3 weeks. Take it back towards its 200-period moving average. S&P dropped almost 10% in about 2.5 or 3 weeks. See something dramatic happen to allow us to follow the seasonality here. So we could be getting back on track with it. It hasn't been perfect, and it stopped following the post-election seasonality here for a little while. Over the last 20 years, could we be getting back on track with that with a September rally and then now a possible September sell-off into an October low? We'll see, and then a spectacular fourth quarter. Made a lower high. We have a multiple point divergence on the RSI, but it made a lower high than the peak that we had on July 31st. Last time you saw the RSI at these extremes, and again here with a bearish divergence, over here we didn't have one, was back in July of 2024, and with that extreme, the S&P dropped in about 3 weeks. It dropped nearly 10%. If we were to drop 10% from where we're at right now, we would drop down towards the 38.2 Fibonacci, just beyond our peak over here from the February high, and we would move back towards the 200-period moving average. Let me bring it up here. It's the black line you see right there. We're likely going to take out our 50-period, probably move back towards the 200, maybe finding support at the February peak over here from February 2020 high, or move back towards the 200. But the risk is we get a bigger Fibonacci retracement, and if we have now peaked, if we have peaked, we have to see it validated with signals turning back to bearish. We don't have that. We have some warning signs of a possible top. We have multiple points of divergence going on with the S&P 500, and with divergences on the intraday charts as well. But if we were to sell off 10%, that would take us back to where our 38.2 and where the 200 is right now. We'll probably end up dropping towards the 200 period, at the 200, or just beyond it. I think Bitcoin will move beyond the 200 period moving average. If we get a bigger dump, though, if we just do what we did back the last time the RSI was at these extremes, you're looking at a 10% drop. You're looking at a 38.2 test that would take us back to 6,000. Fibonacci retracement, if this high holds, our 50% retracement at 57.74, our 61.8 Fibonacci at 55.54. Just some levels to be aware of. You're gravitating down towards the 200 period moving average, and I think you'll try to find support above it, at it, or just below it. I don't know that we get a bigger Fibonacci retracement, but last time the RSI was at the extremes that we're at right now and forming a divergence, and here we got a slightly lower high, we ended up getting a 10% drop in the S&P, an even bigger drop on the NASDAQ. RSI has just moved off of an extreme we slightly above these highs. Again, the last time the RSI on the NASDAQ was this high was back in July of 2024. Now, here we had a divergence that gave us a sharp decline of 15.79%. The S&P had no divergence at that time. You don't have to have a divergence, so keep that in mind. But oftentimes extremes, like we had down here, no bullish divergence. We just reached an extreme at the bottom. Divergences can mark tops and bottoms, or extremes can mark tops and bottoms, or divergences at extremes. Here we had a divergence on the S&P, we did not, and we ended up, because of that divergence, we ended up getting a bigger sell-off, nearly a 10% drop on the S&P, 15.79% on the NASDAQ in about 2.5 or 3 weeks or so in July there. Had sell-offs in July the last 2 years, in 2023 and 2024. We didn't get really much of a sell-off in the summer. We dropped 4.28% and bounced out the 50-period moving average there in August. After dropping 4.28%, we've had the September rally. We end up getting something similar to this with the extreme reading that we're getting and turning down off of that extreme reading at 78, 15.79% in a couple of weeks here, 2.5, 3 weeks. That would take us down to beyond our 200-period moving average if we got something similar. It would take us towards our 50% retracement right here at 20,683. We have the peak over here from February under the 50 period, but above our 200. And then we have our 38.2 Fibonacci under that at 21,662. So just some interesting things to be paying attention to. Some warning signals, but that has to flip the signals back to bearish. Signals turn back to bullish there in August. NASDAQ must remain bullish for the S&P. They have to turn back to bearish if we're going to validate some kind of sell-off here. But just be aware of those 200-period moving averages and that we reached an extreme reading on the RSI similar to what we had in July of 2024. Remember, a bearish divergence here, we didn't have a divergence on the S&P and we still got the sell-off. We have to have a divergence. Tomorrow we're going to get the revised GDP. This will be the third estimate we'll be watching to see how that comes in. It's expected to hold steady and stay the same. Got a bunch of Fed speakers tomorrow. But on Friday, we're going to continue to monitor the PCE inflation data. The year-over-year is supposed to come in slightly higher than the previous reading, and the core year-over-year is supposed to hold steady at 2.9. So again, I'm going to be watching to see if inflation does come in hotter than expected, rattle markets, and then next week, at the end of the week, a week from this Friday, we'll be getting that jobs report. And if that ends up coming in stronger, there could be concerns that the Fed isn't going to cut rates. I told you, we could very well have a one and done. Over the internet, I'm seeing, we're going to get these cuts now. This is so bullish. Well, the cut we just had was already priced into the market. When Powell said that he's cutting because of what's going on in the labor market. When if we start getting data showing the labor market improving? As it did right before the recession in 2007. You got the negative number, and then it started improving, and then you got a big negative number, and that ended up producing a top in the market. I think you're going to see something very similar to that here in the coming months ahead. We'll be watching the jobs report next week on October 3rd as we kick off the new month. There's no estimate here yet. We'll be watching to see if we see it come back, and it's been coming in very weak, and we see the revisions downward, see revisions back up, and do we see a couple of strong numbers as we go into the fourth quarter? We could sell off into earnings season, into October, the kicking off of earnings season, and do a reset before going to one final climax rally in the market and with Bitcoin. And S&P 500 turning off of the upper boundary of the rising wedge here with the S&P 500. NASDAQ's got the same thing going on, and NASDAQ slammed into that trend line, the upper boundary of the broadening formation. It's turning down off of it, but you're turning down here. You drop below your 50-period moving average. You've dropped now below the 200, where you're closing just right at that level for the close, and broken the trend line. Right here on the 15-minute chart, the shadow's a little bit different than on the 30-minute chart and 60-minute chart. You see, we tried to bounce off this trend line during the session, and then it failed, and we ended up dropping back and losing the trend line and coming back to the 200 period. And I talked about how, again, you got to take out the trend line, you got to take out the 50 and then the 200 period. We're holding below the cloud. We'll see if we back test or not. There's a little Class B divergence right here at this low. Might try to give us a back test. Best moves don't back test. But as we've gotten the peak 3 sessions ago, I'm getting warning signs that day, and then yesterday getting more warning signs. We're turning off of this upper boundary. Let me show you. And as we're seeing the diversions play out here, the 60-minute chart had already broken the trend line, tried to get back above it today. The shadow here is a little bit different here on the 60-minute chart than on the 15-minute chart. I'm excluding the shadow out in both. But here we've come down to the 50 period. We'll see what happens here. We broke down and we ended up back testing on the 60-minute chart. And now we're turning down and we're right here closing at the 50 here, closing at the 200 period on the 15-minute chart. So again, we'll see if we start making our way down towards the 200 here on the 60-minute chart. MACD turned negative, got the diversions going on there, got the diversions going on here with the RSI. This is our September rally. Bitcoin, I told you, already broke the trend line, started selling off. It peaked the day after the Fed and started a post-Fed sell-off. Signals have turned back to bearish on Bitcoin. I've got the same warning signs that I had on Bitcoin, stopping signals of warning signs. Now I've got them on the S&P 500 on the day of the peak there and the day after, which was yesterday. We see more selling pressure as those signals start to play out. Let me show you those signals as we're slammed up right into that trend line right there for our rising wedge from the September low. And remember, Bitcoin and the S&P and the NASDAQ, they had that positive correlation going on in September. Bitcoin broke down already, reversed off major resistance at 61.8 Fibonacci, making a lower high. The market made a higher high, turning off some interesting trend lines like this one on the S&P and the ones we have on the NASDAQ, 15-minute chart, and on the daily chart with the broadening formation. Divergences formed just like they formed on Bitcoin's 4-hour chart. Now, as we slammed into the trend line, I got a couple of signals. Let me show you on the S&P 500 and the NASDAQ. I got warning signs as we slammed up into that trend line. Same with NASDAQ. It got a slight overthrow of the trend line right there in a rising wedge pattern, now breaking down and back testing, dropping below the 50, resting right there above the 200 period moving average here on the 15-minute chart. We have a negative divergence that gave us the sell-off here in the 15-minute time frame. 60-minute chart of the NASDAQ, slight overthrow on the 60-minute chart, again, coming down to our 50-period moving average. So as we're hitting these peaks and turning down yesterday, continuing to decline today, we're breaking down from these rising wedge patterns. NASDAQ slammed right into the upper boundary of the broadening formation from our summer peak in 2024. And the December high in late 2024, we slammed right into that trend line, this massive broadening formation. As we're slamming into the trend line on the NASDAQ, and as we're hitting the upper boundary of the rising wedge on the S&P, some warning signs. Let's talk about the upper boundary of the rising wedge here on the S&P first. As we're hitting that and turning down off of it the next day, I'm getting some warning signs. Again, we got that 9 count previously, and again, we've overthrown it. Went a little bit higher. Here's the S&P daily chart, but I'm getting a warning sign that, hey, we're either going to get a reversal or some kind of corrective move. Other warning signs have been present. We haven't seen much of a pullback, and remember, my signals have been consistently bullish, except for the turn in early August off of the July 31st peak, and then some signals tried to turn back to bearish in August. Most of them did not on the S&P, but we did have it with the NASDAQ as it dropped 4.28%. But getting a warning sign here that, hey, we might be getting a turning point. Got another warning sign today here. I had a couple of them yesterday, and at the top, some other ones. I got 2 other ones today. Here's one on the S&P 500. Again, the warning signals have just marked pullbacks or sideways moves. Here, a couple of pullbacks in August that were very mild. So again, here telling us we're either going to get a pullback or a reversal. Again, going to be watching the 200 period moving average. Be watching the previous high from February. And then here, got a sell signal on the S&P 500 yesterday. That down day, again, slamming up into the upper boundary of the rising wedge on the 60-minute chart, a 15-minute chart. Particularly NVIDIA getting a sell signal yesterday as well. We had that big rally back up on the news that NVIDIA would be taking a stake in Intel. Now we're seeing NVIDIA sold at major resistance in the weekly time frame over and over again. And now this horizontal level of resistance, bearish inside day yesterday, not confirmed today, closed below this bar, this wide range bar right here. But again, we're seeing selling on NVIDIA and Oracle. Today I got a major topping signal for the semiconductor ETF SMH, major topping signal. I got one for NASDAQ as well. That was the semiconductors. I got a major topping signal for the semiconductors. I got a major topping signal yesterday for the NASDAQ here in the daily time frame. Major sell signal yesterday for the NASDAQ 100. Now, these other signals have produced corrective moves that have pullbacks or gone sideways. We had the August sell-off, but likely going to get something bigger than that for going higher. And again, the fourth quarter is probably going to be good. We're probably going to get a sell-off over the next few weeks here, going into earnings season, going into October. There's risk of a government shutdown. Sometimes get rattled with that. There's also possibility that hopes can be dashed if we see improving data in the labor market, if we see inflation ticking back up. Why would the Fed continue to cut? As I keep saying, it could be one and done until the Fed panics later. Maybe into the first quarter, January, February. We pull back here, we can rally up into November, December, or maybe on into January, February. Like Bitcoin's going to do that. Markets will play catch up to the correction for Bitcoin, but then likely will have a spectacular fourth quarter. Will likely be the final climax rally for the final phase of the blow off top, which began in April. That's why we're getting such a powerful rally again from our low in April, the final phase of the blow off top. NASDAQ peaks, it's probably going to drop about 40 or 45% like it did with the bursting of the tech bubble a couple of months. It's going to be quicker than this rally up, but we're likely going back to this low back over here once we eventually peak. Just some warning signs over the last 3 days. Same thing here for the NASDAQ. Again, getting a sell signal today. Again, the last few that we've had only produced little pullbacks or sideways moves. The corrective move in August there of 4.28%. Signals reverted back to bullish. So again, some warning signs. Wanted to show you that. Getting it on both NASDAQ, the S&P, and NVIDIA. These are the same warning signs that showed up on Bitcoin, and we saw it break down from the rising wedge, start a reversal. We're now seeing the breakdown, beginning of the breakdown of the rising wedge on the S&P 500 there, the reversal off of the upper boundary. Turning here, getting this signal of that major trend line with our broadening formation in the daily time frame. Signals for the NASDAQ and the S&P remain bullish. Signals on the S&P have been consistently bullish since the bottom. They tried to turn bearish in with the July sell-off there. They turned bearish early August there, but then flipped back to bullish. Most of them remain bullish through August. NASDAQ, though, got signals turning back to bearish and then reverted back to bullish. They're still bullish. We got to see signals. If we do see the warning signs that we're seeing right now begin to play out, it's got to flip my signals back to bearish. My signals remain bullish, the S&P and NASDAQ. Take out the 10 and 20 period moving averages. You got to flip momentum. You got to flip the trending signals here. S&P daily. NASDAQ, we saw signals turn back to bearish after this reversal off the July 31st peak. We saw another sell-off. Most signals stayed bullish for the S&P at that time. Signals reverted back to bullish with the September rally. Already flipped back to bearish for Bitcoin. We're likely going to see that happen with the NASDAQ and the S&P 500. Had smaller sell-offs in the summer months. Likely going to get a bigger one now. S&P daily. NASDAQ daily, again, signals turn bearish here in the last half of August going into September. They've turned back to bullish. They've got to turn bearish if we're going to see a sell-off. Some of the warning signals that are forming right now, if those are to play out, we've got to see it confirmed by signals turning back to bearish. The signals have been bullish for the S&P since the bottom. We saw them revert back to bearish here in August. Most signals remain bullish. NASDAQ turned back to bearish, but not the S&P. In order to turn down and confirm a reversal, we have to drop below the 65.70 area at the moment. Again, signals remain bullish. That's going to have to turn bearish if the warning signs that I'm getting for the last 3 days as we're turning off the upper boundary of the rising wedge does play out. We've got to see it confirmed with trending signals, swing trend signals here turning bearish, and with momentum signals turning bearish, a reversal of conditions. S&P daily. Same thing for NASDAQ. Again, signals turn bearish after the July 31st peak, turned to bearish again in August, reverted back to bullish. If we're going to go lower, we've got to see signals turn back to bearish. Signals have been consistently bullish since the bottom, and with only mild pullbacks on the NASDAQ and the S&P 500, we'll see now get something bigger. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. If you follow the link below, it'll take you to a secured site and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. Forget that we've had a breakout of the VIX yesterday. It was validated with the MACD turning positive. It's pulling back and back testing today, but I told you we could see a big wide range bar in the next couple of days at some point this week. Last time we saw this happen where the MACD went positive was back over here at the February high when it turned up into the positive region and remained there. We saw the breakout of this little wedge pattern. We got back above the 50 and the 200. We had this big wide range bar and we had a breakout. The tightening of the Bollinger Bands back then. You've got the same thing, the tightening of the bands here. Warning, something big is getting ready to happen. We rose up. We saw a big sell-off on the S&P 500. As you can see down here, saw a big sell-off on the S&P 500. And then we turned back down and tested the 200 period moving average, got another bullish falling wedge and broke out of that and firmed up at the center line. And when you did that, got back into positive territory on the MACD, we had the next leg down in the S&P 500. You had these 2 legs down that ended up dropping 21% in totality. So you're likely going to see some kind of big sell-off right here, bigger than what we've seen so far. The sell-offs that we've seen so far in the summer have given us these spikes in volatility that have halted near the 200 period moving average or the 50 period moving average, one of the other. That's what we've seen in the summer. We're probably setting up for something bigger now that the MACD has gone positive, in positive territory with the bullish divergences. And again, the bands are tight above the 50 period moving average, and we broke out yesterday, and we're likely back testing right here. We'll probably see big surge in volatility before the week ends. And I told you it could happen today, it could happen tomorrow, but before the week ends, this breakout is probably going to produce a wide range bar, much like what we did back at the February high and back at the March higher low for the VIX that ended up resuming the decline and causing a huge spike in volatility surrounding going into the tariffs, launch of the tariffs. Just be aware of this. S&P sold off right down to the 10 period moving average. That's a red line you see right there. We've got to drop below it, take out the lower boundary of the cloud if we're going to reverse in a getting a bearish reversal of conditions for momentum. It flipped back to bullish after the August sell-off. We went sideways, and then that gave us a September rally, and we've been above the 10 period moving average. Again, we're likely going to try to move back towards the 200 period moving average. Maybe we reach it, maybe we don't. Again, we could find support, the February high, the S&P daily right here. I'll be watching for a red awesome oscillator bar, stochastics rolling over. Massive divergences have formed in the daily time frame. We'll be watching for a red bar. And again, Bitcoin has already started The post-Fed sell-off immediately after Fed meeting, it peaked and began to turn down. Now the market's playing catch-up. We're still going to get the post-Fed sell-off. The rate cut's already been priced in. The question is, will the future rate cuts for 2025 be taken off the table? Again, it could be one and done. Said that on social media, people scoff at that possibility. The herd believes that the rate cuts are so bullish. Again, the rate cut we just got, it's already priced in. Stochastic rolling over on NASDAQ with the small divergence there. And again, we've got a test of our 10-period moving average. We bounced off of it. If we start breaking the 10-period moving average, closing below the lower boundary of the cloud will flip back to red. We've had the run up in September. Bitcoin already reversed. Now the market is starting to follow suit. Bitcoin is a leader of the pack.